Hello traders, welcome to Trading with Bill, Options and Forex. Traders, September 30th, 2015, end of quarter, end of month. Could we get any more excitement in the markets as we have in the last 2 weeks? It just keeps flowing, my friends, and that's what we like. A little bit of turmoil to keep us on our toes. Win, lose, or draw, it is still fun trading the markets. Have a great time. Traders, come to you live from Thailand. We have rainy skies, now we have cloudy skies. Weather has been horrible for the last 48 hours. Hopefully we'll get some sunshine sometime in the near future. All right, let me introduce myself to you, then we'll get started. Got some charts and some option charts to look at. My name is William Gilday, and yes, they do call me Bill. Traders, I started trading in 2006, and in 2008 I retired from a great career as a firefighter paramedic out of the great state of Florida. Traders, in 2008, after I retired, 9 days later, came to Thailand to celebrate my fantastic career, and was only supposed to be here for 3 months. Well, guess what? 8 years later, I am still in Thailand. Absolutely loving it. Love Asia, love Thailand. Great place to retire, and the time zone is awesome to trade Forex, where I can trade all 3 time zones and still get a good night's rest. Traders, I trade as a technical trader. However, I do follow fundamentals, and every day I'm learning more and more about fundamentals and how to read them and how to digest them as it affects our trading. Traders, if you would have asked me 4 years ago if I looked at fundamentals, I would have laughed at you. I listened to them, but I didn't understand them. Today I understand them and I know what's going on, and it's a big part of our trading. However, I do trade charts. I trade price action, support, resistance, and that's what I trade. I'm always looking for opportunities with probabilities on my side to get a W in the win column on a trade. Traders, I do lose trades. That's just part of trading. All right, that's enough about me. Let's get over to the risk disclaimer. Forex trading and options trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex and options markets. Most importantly, please do not trade with money you cannot afford to lose. Traders, your money management system has to be on tact and has to be perfect for your situation. Remember, the object of trading is capital preservation, and then make profit, right? Okay. Always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's head over to some Forex charts. We're going to bring up the New Zealand dollar. This is on a 4-hour chart. I was in a trade room, and a trader in the room who I have a lot of respect for and is becoming a friend, Thiago, talked about this trade, and I really love trading 4-hour charts. I can't wait till I can do it full time. But trading 4-hour charts. So we talked about this trade, and we're basically taking this trade to the downside due to this. Now remember, the magenta line is a 4-hour chart, right? The yellow line is a 1-hour chart, so that's a 1-hour fib, right? Just in case you all forgot how my lines are set up, they're all color-coded to tell you where these trend lines come from, what time frame on the charts. So what we're doing here is we're shorting this New Zealand dollar, and I've got my take profit at 0.6255. Now, so what's going to happen here is I'm hoping this comes down. My stop is at 64.10. You can see it up here. And I'm looking to take this down, like I said, to 62.55. You can see it right here. I think it says 56 right there. It's right under it. It's 55. And that's what I'm looking for. So what am I concerned about? Yeah, exactly. I'm concerned about the Ichimoku cloud here, right? What is this Ichimoku cloud telling me? Yeah, this is a lot of support here. This is going to take some work to get through this cloud. This is a 4-hour chart, so I'm going to be break even. This is going to be a free trade before I fight this war in this Ichimoku cloud to get past it, and then we have to get past the 6,300 and get past that and then come down to my take profit area. So this is not going to be a quick trade unless the New York sessions data moves as poor numbers in the New Zealand pops up and knocks me out of the trade, but I don't see that happening. And so I'm expecting this to come on down, and this could be an over the weekend trade, not sure. We got some time in this trade, but we are in an active trade. You can see the little arrow is red, meaning I'm not in profit yet. That's when I took the snapshot. I am in profit, and it is below the trend line before I took the slide. But we'll see what happens. Things can change in a heartbeat. Remember I told you all weeks ago that I only use the RSI on the daily chart and the 4-hour chart, and I'd like to really see this take a bend here when this 4-hour session, when this 4-hour candle is over. I'd like to see this take a bend to the downside on our RSI. All right, let's take a look at the euro. This is the euro 30-minute chart. What a mess this is, isn't it? But look at how light this is. Look at the cloud here. Cloud is really weak. This just came barreling right through it, right? This was in Asia, right? Just came right on through this cloud. Then we had some problems here. This is the 200 exponential moving average, and it's been rejected here, right? It's come off the 200, it's come back to the 200, it's gone up again, it's come back. Really hasn't made its mind what it's doing here. And then you can see from the 30-minute chart, I placed some trend lines here. So, you know, I learned long ago that there's two kinds of trend lines. There's an aggressive trend line, and then there's a conservative trend line. Well, the bottom trend line is a conservative trend line, and then I have an aggressive trend line in here. So you can always put two trend lines in. Always remember that in the back of your mind, that if you have an aggressive trend line, you can always put a conservative trend line in also. Just gives you a little bit of viewing of what's going on in the trade, right? Just gives you an idea of what's happening. However, I'm a big person of higher time frames. So what did I do? I went around and I hooked up with, here again, I did not do it on this. Maybe it's later. I thought I put a 4-hour chart in and I don't see it. Anyhow, I'm not in this trade. There's too much Forex junk here. All right, we need to get some sort of consistency here and figure out what this wants to do. If you look left of the chart here, this is a lot of Forex junk. I don't want to trade in this junk. I want to be clear of this, right? Either come all the way back up and I'll sell you, or come all the way back down and I'll buy you, right? But I really don't want to buy the euro. I want dollar strength. I'm looking for dollar strength as we come to the end of our week. Okay. All right. Let's take a look at the Aussie, and yes, I do have another chart of the euro. Okay, so this is the Aussie. This is a 4-hour chart. You know, all I want to do is I want to sell the Aussie dollar. I really do not want to buy the Aussie dollar. However, I always bring up a 4-hour chart and a daily chart before I do anything. A couple of things I noticed here. One is that the bottom Bollinger Band is sideways, which means it's opened, and the upper Bollinger Band is curled to the upside. That was my first consideration. Second consideration is that this 55 EMA has been rejected by this candle. Can't get above this 55 EMA on the 4-hour chart. So my other concern is that the RSI is above the 50 line and is pointing to the upside. So there's no trade here for me as of yet. I wouldn't mind if this got all the way up to 70, and this will be at the edge of this cloud. And, you know, and we can take it down from there. Or it's going to reject here from this 55 EMA line, this blue line, and we can just sink this to the downside. The 200 exponential moving average, which is a stark green line, is of no problem for us in this trade. All right, I did have a euro dollar, and I want to bring that up to you. This is the 60-minute chart. This is a 60-minute chart. The reason I bring this up to you is because I want to show you what a typical rejection from the Ikimoku cloud is, and a 200 exponential moving average. And I've actually put an arrow in the chart today. So what we had was price comes down, breaks through the 200, closes, okay, gets popped back up again, or comes back down into the cloud, gets rejected, right, pops up, second candle comes out, gets rejected by the top of the cloud, and now is back inside the cloud. Okay, the cloud is support, folks. So we would expect this to get rejected here. However, we got a huge confluence here. We got a cloud. We've got a 55 EMA that's right on top of price of this red candle, and right below it we have the 200 exponential moving average. So we got a mess here, right? So again, I want to sell this. So where am I going to sell it at? When am I going to sell it at? Well, I'll tell you the truth. I'm waiting for this baby to come back down to 1,200. We'll take it down to 1,100, and I think that's possible. Is it going to be possible this week with all the nonsense that's going on? We got a lot of data come out. We have ADP coming out. We got non-farm payrolls on Friday. So, yeah, I'm not looking to jump in this right away. So I would presume that this is going to come back down to 1,200 at some point. And I would love to short this down to 1,100. Now, look at below the cloud. I want you to look below this blue cloud. And if you look left of the chart there, we have two candles with wicks on them and a fib. Okay? However, after that, we have a wide open space here. We don't have any Forex junk here to take us down to 1,100. This is going to be a great trade if we can get this to work. We need to break this 1,200, get down to like 1,190, enter this trade to the downside with a bearish candlestick formation, take this down to 1,100. We don't have anything in the way to block us. This is a nice trade to the downside. So this is definitely on my watch list, and I'm going to be watching this like a hawk. Because as soon as we get that level, I'm in. And this looks like a nice trade for a nice 100 pips here, real easy. Okay? All right, let's head over to options. Let's take a look at some options. What do we have here? The DX. We got the dollar index. Why did I bring this DX chart up again? I bring the DX chart up most days. However, take a look here at the white line here. It's a 200 exponential moving average, by the way. It shows up on the black chart. Yes, I had to change to black charts because some of my indicators were not working on the white charts. I wasn't seeing stuff, so I had to go back to black charts. They were a little hard on my eyes, but it's okay. I'm getting used to it. So what do we have here? We have a 200 exponential moving average. We have a 50 exponential moving average, which was this red line. This is what I want you to see. The last candle, which was yesterday, of course, New York is not open yet, and so this is really, it closed in the up mode to the upside. So we have a green candle here. Look over to here, to the red dashed line here of the day, and you can see we have an up arrow from our personal pivot points, giving us an upside move. So to me, this is saying that we're going to see some dollar strength here. Look at this Bollinger Band to the upside. That's what I like to see. Look at our parabolic ZARs. No white dots above price, all below price. That's what we like to see, right? Come on down to our indicators. This is our market DNA, right? Look at this green line. Up to the 0.5 level and heading up, right? Look at how the stochastics is. Nice curve to the upside, right? Stochastics is giving us a curve. It hasn't broken that 50% line where we'd like it to, but we got a jackknife to the upside on our stochastics. Really nice. Just saying that there's a really good chance that this baby is going to continue to the upside and continue dollar strength. We'll see. Okay, let's go to this spider trade that I'm in. You're all well aware of that. And we did get some gain here. If you remember yesterday, I was quite in a loss on my options, weekly option trade on these spiders. However, a couple of changes have happened since, good and bad. Let's talk about the bad first. First of all, both Bollinger Bands on both sides of this trade are wide open to the upside. The other thing is remember yesterday we only had one parabolic ZAR above this 50 EMA line. We had one. Today we have two. Okay, I don't like that. That's saying that price wants to continue to the downside. However, our market DNA indicator is showing an up move. Remember, this was pointed straight down yesterday, right down here to the zero line, right down on the bottom here. However, we are at the 0.5 level and we have an up move. Stochastics is not giving us our jackknife yet. And I really would have liked to see that give us a jackknife here today. So prices come up to 188.12. This has helped us out. This, I think it went up 2% yesterday. Remember, we took a 4.6% loss on this option trade. Remember, we took a sell at 186 and we have insurance in at 184. So we, on a vertical bearish spread, right? We're taking vertical spreads here. So basically what I'm saying is that price is going to remain above 186 by expiration, which is the end of the New York session on Friday. Actually, it's Saturday, but who's being technical today? So let me show you the numbers. Remember, this is live account. This is my live account. This is not a demo account. And let me show you where we're at and what's going on. So here we are in our spiders trade. And if you remember yesterday, we were $470 something underneath, and on the positive side we were 320 or 330 right to the upside here. Now take a look at what's happened here. Due that this has made this up move, we are now $87.50 positive to the upside, which is our insurance, okay? This is our insurance. The negative, which is on the bottom, this is what we're negative now. We're negative 175, okay? We're negative 175. At current time, that is what we are negative on this trade. So, all right. Now, when you take these both together here and you subtract them, actual loss right now is $87.50. So our actual loss is $87.50. That's at $87.50 from our insurance and our $175 from our loss, right? And we subtract that and we come up with $87.50. We are in the negative on this weekly option that expires on Friday after the New York close. So keeping our fingers crossed, we'll just continue on this trade and hope the markets continue. The S&P 500 keeps going up, right? That's the spiders ETF is the S&P 500. So we just want this to continue to the upside, and let's see if we can get that profit. Our max profit is $350, by the way, if this was to work out in our favor. It doesn't look like we're going to make that as we are into Wednesday already, and we only have 2 days left. So I don't think we're going to get to our take profit, though. I'd like to get to $80 or $90 tomorrow in profit, and I'd like to exit this trade on Thursday close to the end of New York. I really don't want to be in this trade when all that data comes out on Friday with NFP, unemployment out of Canada and the US. So I really don't want to be in this trade at that point. So I really want to be out of this trade by that. But if we're not there, I'm going to have to put on the seatbelt and hold it. But remember, traders, good money management. If I lose this trade, I lose the trade. It's okay. You know, I have very strict money management rules, and it should. If you lose a trade, it should be like wiping dust off the top of your computer. It should be nothing. It should not affect you mentally. You should not be losing sleep over your trades, right? I know this went a little long today. I said it was going to be short, but that's real important in our trading. Money management. No, 1%, 2% of your account at the max when you're in these trades. Okay? All right. Traders, on behalf of myself, William Gilday, and yes, they do call me Bill, I want to thank you for being with me for another day, third day of the week, Wednesday. End of the month, end of the quarter, could be a rocky New York session. I won't be in front of it today, traders. I have a dinner engagement this evening. It's currently 20 minutes to 5 in the afternoon in Thailand. That means it's 20 minutes to 6 in the morning Eastern Standard Time. Traders, you can follow me at WKG1960 on Twitter, or you can go to my website at tradingwithbill.com. Helping losing traders become winning traders as a team. Take care, traders. Have a great trading day, and the best to you. Remember to trade smart and not hard. See you now. Bye-bye.